Hey guys, how are you? Vladimir Ribakov here from Traders Academy Club. This video is a weekly performance review of the sRs Pro and the sRs 2 for the week 2nd till the 6th of December 2019. As you know, every week we review the performance of the system, explaining the logic of the trades, the technical analysis that stands behind it, and all the steps we do before we take our trades. As a rule of thumb, we always pre-analyze the market. We choose the instruments we would like to be involved with based on the technical analysis, the tools we have, and then we are waiting for the system, in that case the sRs Pro, to alert us in the direction we are looking to validate the setup by the sRs Pro rules and trade them. And right now I would like to go over the trades, which you can find as always in srstrendrider.com. So everything is available for you here. And now I would like to go over this position and explain the logic behind it. The first one was the euro versus the dollar. What we had here is the breakout of this ranging pattern, a triangle with more than 5 spots inside it, and the breakout in the bullish direction. As per the analysis, this was the thing that we saw here. The two waves correction happened on the euro dollar, but before that, let's go back to the daily and see where it all starts from. The bullish pattern was with a blockage of a double top, bearish divergence, and correction. Correction happened in two waves with a bullish divergence. Bullish divergence brings back the bullish pressure. Checking a 4-hour chart, that's the daily two legs, and each of these legs is basically with a bullish divergence by itself, here and here. Fantastic pressure with a false breakout at the end on the lower time frame, and the break by creating the higher highs. At that point, we are after the buys. It becomes very simple decision, and we are looking for an entry. We're waiting for the signal to come. We got a shot to the upside, then a range and a breakout out of this range, and this trade unfortunately failed. Despite an amazing analysis, as you can see, the idea here was to quickly scalp, because this is very short term. As you can see, the idea was a quick scalp as long as we hold this low. Didn't work out. It did continue higher, but first of all, it did move down, which is a great lesson, because not always a super classical technical setup would pay us money. That's the truth, and it's important to understand that. We are not working here to reach 100% success rate or anything like that. The idea here is to make more on the times we are right than the times we lose, and we can do that while we stick to the simple understanding. Multi-time frame analysis without signs against us will improve, not guarantee, will improve our performance and give us better chances. Next one was the Nasdaq, and this was a sell. For those of you who follow the live trading rooms of the Traders Academy Club, you remember this trade, we discussed about that. Those of you who are not, let me explain. What we got here was the blockage of the bearish divergence, and on the lower time frame on the 1-hour chart, we received false breakouts and a bearish convergence here. False breakouts in play, and we got the convergence. Later on, the idea was to sell the rallies. These sell rallies came with a bearish hidden divergence, so we expected at least 2 waves to the downside. This was exactly the idea here, and we got a 2 waves correction to the upside and the sell. The ABCD structure and the breakout, and pretty classical sell opportunity, which in that case delivered. The next one was dollar yen sell, and it's pretty much the same like the Nasdaq. They were following. The technical view here was clearer, because we were dealing also with a bearish trend pattern, which is 3 lower highs, lower lows with 2 waves correction. It started here, deeper one, and then improved angle for us. And we were waiting for the sRs candles to turn bearish. As you can see, bullish correction, blue candles. We were waiting for the cross to the downside. The momentum was bearish, while the sentiment only the 1 hour chart at that stage was with us. Nevertheless, here is what we were facing for our daily triple cycle, bearish divergence, 4 hour chart supporting the view with a bearish divergence by itself, and the 1 hour chart was the one that gave us the 2 false breakouts and the bearish convergence. Exactly like with Nasdaq, this is a bearish hidden divergence for sell continuation, and that's what we traded, and that's how it ended up. So the higher time frame are the ones that give us the bearish direction by making the pressure of multi-time frame bearish divergence. Then lower time frame start to create a lower lows, pulling back, bearish hidden divergence for trend continuation, and easy sell to be taken. Then we got another Nasdaq, the same analysis, not going to repeat that. That was the first opportunity. And then we got the improved one with slightly bigger ABCD. The analysis is the same. We expect a new low and deliver. So that was a good hit. Just please pay attention. The pipsage here is definitely wrong. It's not 1,000 or 1,700. That's a wrong calculation. So we do not trade for pips here. It's very important to mention. We trade here for percentage return versus risk and return. So that's the numbers to pay attention to. Next one on the list is the New Zealand dollar. Buy also was a great setup of a classical ABCD in a bullish trending structure that we were facing here. 2 waves correction, breakout. The idea of the... where is that gun? Just to close and chart. New Zealand dollar. The idea here was we are riding the buys after the break of this range. At that moment on the go, there were no signs against us, and we expected a continuation. The continuation happened to the upside as planned, but unfortunately before it continued, it first of all hit our stop loss. Then it retraced up again. But as you can see, we cannot control the market. All we can do is to trade facts. That's what we can do. Trade facts. Will that work? Will not? We do not have tools to know that in advance. And it's important to remember that. Pound versus the franc. We went here for a sell of the 2 waves breakout. The idea here was basically a bearish divergence. We were expecting a turnaround, and that was the place. Bearish divergence from the 4 hour, bearish divergence back then on the daily, and the 1 hour chart was the place that basically gave us the okay to go. We started by creating the lower highs, lower lows here in a miniature structure. 2 waves correction, and the idea here was to go for a sell. It's important to say at that stage there was no divergence against, so we were expecting at least one more low. That was the trade, and that's pretty much what happened. First target reached, second closed on break even. And the last one for previous week was the pound yen buy with this 2 waves breakout. By the way, for those of you who watched, this trade idea was shared on a day trading opportunities inside the YouTube channel. If you missed right now, on the top corner, right top corner of the video, you will be able to find this video. You can watch it and watch the explanation. But the logic for this pair, which continued to push fantastic since then, was very, very simple. We are in developing triple cycle from the daily, expecting the 144, 145 area, or at least close to that. The 4-hour chart gave us a bullish structure. Here we got a breakout, and at that point there were no divergences against. So our plan was looking for the buys, and we received this opportunity for the buy. The pullback was tiny, however, it's important to say all the higher time frames are bullish, and none of them had signs against. So we got these little two waves, breakout and direct continuation, and first target was reached, second closed on break even. We can see here another pound yen, but this is already this week trade was the ABCD breakout here, with the ABCD that was already breaking before, retested, and providing the opportunity to rejoin. But I will explain that the next week. So that's the performance that we had previous week on the SRS, SRS Pro, and also quick review of the SRS 2, which in the previous week was okay but did not provide too many opportunities. So the pound yen we discussed, the idea is pretty much the same analysis, but I would like to cover the ones that we did not talk about, the Australian versus the dollar. So what did we have with this pair? Basically a strong push to the downside, and then a slowdown with these false breakouts. The idea was to get a corrective cycle in 2 waves at least, and to that's what we wanted to see. And if we go to the chart, so here is where it all comes from. A bullish massive divergence here, and we got at the end, as we can see, the false breakout which started all the way from here, massive divergence, and the daily supports us with the bullish pattern. 3 lower highs, 3 lower lows, 2 waves, pull back, and the 1-hour chart at that stage was also supporting to the buys with the bullish divergence. By the breakout here, we started to gain the momentum, so the idea to buy is super easy. Of course, as the breakout happens, we also gain the momentum, creating the convergence in play. Easy decision, nothing else to say. And the last one was gold, the attempt for a sell. The idea was here to enjoy a corrective cycle of this pattern, the 3 higher highs, 3 higher lows. So that's what we were looking to trade. Unfortunately, that did not work out, and loss. So that's from the SRS 2 and before the SRS Pro. Very important lesson we can learn from here, and that's what we always do, and that's the message I always deliver in the SRS Telegram group. That the most important thing is pre-analyze, choose the instruments you want to work with, make sure the higher time frames do not have instant levels against you, if it's resistances, trend lines, or mainly divergence. That's what I love by myself a lot. And as your trend is clean, that's where your chances are. Can we guarantee a profit? Of course not. And I just showed you that the euro dollar and the New Zealand dollar were amazing technically, but yet failed. We cannot guarantee profit, and we should not even try to do so. What we can do is to focus on the clean situations, trade them, and improve our statistics accordingly. At the end of the day, it's a game of statistics. It's a business of numbers. And what we can do is to trade on the clearer situations, clearer trends, because that's where the odds are. And the performance should be the focus. What we do should be more than what we lose. And that's achieved mainly on trades that are synchronized on the multi-time frames. That's why I make this video, to explain the logic of every single step, of every single analysis, how it's done properly. And as you can see, these trades are exactly the trades that we discuss, for example, today. And Etienne, thank you for that, sharing where is that? Here, sharing his pound yen buy trade. It was pretty much exactly the same trade that we did, and I just showed you before, explaining here, covering the setups, explaining the logic behind them. This place is for you, and this is the time to say, for all those of you who on the sRs, if you have the copy of the sRs Pro, join our Telegram channel. We are there for you. We share ideas, we discuss about ideas, we are there to help you with the setups. If anything is not clear, use it. That's all I have. And if you do not have your sRs copy yet, and you would like to join us, no problem. Below the video you would find in the description the link to the sRs Pro. There are two ways to join. One of them is to get it free with our get your license to the sRs Pro free with the brokers program. You can find all the information about it right below the video in the description or in the pinned comment. So meanwhile, thank you very much for watching. I hope you find this video useful, helpful, educational, and I'll see you in the sRs Telegram. Thank you for your time. Yours, Vladimir Ribakov.